Hello, Nazi Forge here, your host and your tutor for the next few minutes. So, what is an order block? If you are a smart money trader or an ICT trader, you would have come across this term. I would also say this is one of the basic concepts of ICT or smart money trading that you should know at the back of your hand. So, it's just a simple concept. An order block is just a price zone or area where smart money have placed large orders to move the market or to move the price in a particular direction. It could be a sell order, it could be a buy order. That is why we have bearish order block and bullish order block, depending on the trend. So these order blocks are just reference points, institutional reference points, more like a footprint that the smart money leaves for you and I, the retail traders, to actually say they have placed a particular order. So the onus is on you to know how to identify these reference points, these other blocks, these footprints, so that you can wait for them and you ride along with them. You get. So the definition is just as simple as it gets, but the main thing is not just knowing what or how to define another block, but how can you identify another block in a real chart, right? That's what I want to quickly show you on this video. So, but before that, let's look at a sketch of what happens really. So, say we have an uptrend, you have a high, you have a low, you have a higher high, a higher low, you have a high, another higher high, higher low, higher high, higher low, higher high. We could stop here. So there is a place you find valid or strong order blocks in the market. Say in an uptrend, these order blocks are mostly found around the major swing lows. Major swing lows. This is not to say you can't find other blocks in other places, but the strong the most valid order blocks in an uptrend is found around the major swing lows. Somewhere around here, you find another block, and that is why at the end of the day, the price comes back to tap into the other block and move in that expected direction. Are we together? So these are major swing lows. This is for an uptrend. So what prices does is price comes to this point, forms this other block here, then goes up. Then at the end of the day, after taking out liquidity up here, because what's the reason? Let me explain the basic concept of this other block. What happens is when smart money come into the market, they do not have enough liquidity that they need so that they can fulfill all the orders they have. So what they do is that they place the large orders down here, and the price will move up impulsively, moves up. Now there is another liquidity on top of this place, which is an external liquidity. Yep, the price goes up to clear out this liquidity here, then comes down to now it kind of pick the remaining orders here. That is why they come back to tap into the other block and continue moving in the same direction. So that is just the basic principle of another block. But the question is, how do you identify an order block? So this is how you do it. For an uptrend, you identify an order block by marking out the last down close candle in an uptrend. The last down close candle after it is engulfed by another candle. I would show you what I mean here. Say this is a candle. Let's say this is a red candle, which is a sell candle. Then this is another candle. I'll give this green. So how you identify another block is this red candle is the down candle or the selling candle. So this is the last candle here. When another candle opens, which is a buying candle here, this green candle opens, goes up and close above this down close candle, then you can mark this point as your bullish order block. Are you with me? You mark this point as your bullish order block. So this area here is what you call your order block. This is the last down close candle that is engulfed by an up close candle. So this is how you identify your bullish order block. The reverse is also true for a bearish market. Let's say we have a green candle here, which is an up close candle. Then we have another candle, a red candle. This is a bearish candle. So this is the last up close candle before the bearish, which engulfs it. Now we call this the bearish order block. The bearish order block. So this is how you identify an order block in the markets. The bullish, the bearish. Are we together? So we are going to go to the charts. That is where it becomes very, very clear, or clearer than what we've done here. But I just wanted to give you a brief overview of what or how to identify an order block. So let's go to our main charts, real markets. Say we have let's get something, maybe a trend. Okay, looking at all of this place, if you look at this place, this is clearly a bullish market, an uptrend. So what we're going to be identifying mostly here would be a bullish order block. Just watch what we've got here. We have higher high, higher low, higher high, higher low, higher high. So this is a clear uptrend. So how do you identify an order block here? Remember what we said. We said another block is the last bullish, the last, okay, for a bullish market is the last bearish candle before an up move, or the last down close candle after it's been engulfed by a bullish candle. So now watch. And I also mentioned that you always look for them your major swing lows. This is a swing low. Are you there? This is a swing low. This is a swing low here. So when you come here, the black candle here is our bearish candle. This is the black candle here. This is the last bearish candle here, or down close candle here. Then you look at the next candle. The next candle has engulfed it at this point here, meaning this is our other block. Let me make this a bit darker so it looks clearer. So this is what our other block. If you watch what happens after it was engulfed at this point, price went up, came down, went up, came down to tap into the other block, and bought massively up. Again, price came down and still came down to the same other block and bought again. This is to tell you how solid and very valid that this other block is. We could also look at this at this point here. This is the last. This long black candle is the last bearish candle here before an up move. So when you mark here, you watch, this is where it was engulfed or a candle closed above it. So we can now mark this entire candle as what? As our other block. And you see that after it was engulfed at this point, price still came down to tap onto this place and it's bought massively again. So this is the last bearish candle before the upward move, where again we come down again to another place. Here we have the last bearish candle, and we mark this point waiting for it to be engulfed. As soon as it was engulfed, that is candle closing above it, we mark it and we see the price would later come back to it and what? Buy massively. So I hope it's getting clearer. Again, price had to come down to the same point later on to come and what? Still tap and still buy up, telling you it is a very valid order block. And the same concept continues here. This is the last down close candle here, and so this is where it was engulfed. And as it was engulfed, you would see that The next candle came down and tapped into it, and it's bought massively to the upside. Are you there? So it continued buying until it was violated at this point, which we're going to talk about in our next video. Look forward to it. So you got to subscribe, hit the like button, and leave a comment below for the next video that will talk about the concepts or how you trade it when price invalidates or breaks your order block. That will be our next topic. But you saw how we were able to identify all the valid order blocks in this bullish market or an uptrend. The same is true for a bearish trend. Let's look at let's see if we can find any example of a bearish market. Just give a few examples so you see how accurate it is. Okay, let's just use this little example here. I believe we are going to find, let's look at this point here. This is clearly a downtrend or a bearish market at this particular place that I marked. So we are going to be looking for, in this case, we're going to be looking at a bearish order block. That will be the last up close candle before a downward move. So here, let's start from this point. Let's start from this point. The first one here, this candle here, this white candle, this is our bullish candle. It closed here with together, it closed on top, and so when price comes down to break it, that is engulfing this candle, we see that this whole place becomes our order block, a bearish order block. What happened after the price engulfed it? Price would later go from here, tap into the other block, and it's sold, right? It's sold. So that is one example. Another example here. This is, let's look at this. This is an up close candle, and when price broke and closed below it, making it our bearish order block, if we mark from here, you would see the number of time price came to tap into this order block to sell down. It came the first one, the second, the third, the fourth one, we together and sold down. So another example of another block, you go to here, you find the last up close candle before the downward move. We would mark the entire candle, and price would later go tap into it and sell massively down. Are we together? So these are just many examples, and if you, after watching this video, you go to your chart and backtest, you would see how wonderful this whole concept is and how easy it is to identify an order block. All right, this video is getting too long and I'm going to be stopping here. If you have any question, any concern, any contribution, please leave the comments in the comment section, and make sure to subscribe, like, and share this video. Thank you and have a wonderful day.